Japan's economic struggles. What went wrong? For decades, Japan was the epitome of economic success, with rapid industrialization, technological advancements, and a thriving export economy. From the 1950s to the 1980s, Japan's GDP growth outpaced most developed nations, and companies like Toyota, Sony, and Honda became global powerhouses. However, Japan's economic miracle did not last indefinitely. Over the past few decades, the country has faced stagnation, deflation, and mounting debt, leading many to question, what went wrong with Japan's economy? The asset price bubble of the 1980s. One of the most significant turning points in Japan's economic struggles was the asset price bubble of the 1980s. During this period, land and stock market prices skyrocketed due to speculative investment and loose monetary policies. Banks lent money aggressively, fueling an unsustainable surge in asset prices. By the late 1980s, Tokyo's real estate market was so inflated that the Imperial Palace grounds were reportedly worth more than the entire state of California. However, the bubble burst in the early 1990s, triggering a financial crisis. Stock prices plummeted and property values collapsed, leading to massive losses for banks and corporations. This crisis marked the beginning of Japan's lost decade, a period of prolonged economic stagnation that would extend well into the 2000s. Deflation and economic stagnation. The bursting of the bubble led to a cycle of deflation, where prices kept falling, discouraging spending and investment. Unlike inflation, which erodes purchasing power, deflation increases the value of money but makes debt more expensive to repay. This created a vicious cycle where companies and individuals hesitated to spend, weakening demand and slowing economic growth. The Japanese government and the Bank of Japan, BOJ, struggled to combat deflation. Despite multiple stimulus packages and ultra-low interest rates, the economy remained sluggish. Consumer spending and corporate investment remained weak, further entrenching Japan's economic stagnation. The aging population and shrinking workforce. One of the most pressing challenges Japan faces is its rapidly aging population. With one of the highest life expectancy rates in the world and one of the lowest birth rates, Japan's population is shrinking. This demographic crisis has created several economic problems. Labor shortages. A declining workforce means fewer workers to support retirees, leading to economic slowdowns. Increased social welfare costs. With more elderly citizens requiring health care and pensions, the burden on the younger working population has increased. Declining consumer demand. With a smaller and aging population, there is less demand for goods and services, limiting economic growth. Despite efforts to increase the birth rate and encourage female and elderly workforce participation, Japan has struggled to reverse these demographic trends. The failure of Abenomics. To revitalize the economy, former Prime Minister Shinzo Abe introduced a bold economic policy known as Abenomics in 2012. This strategy was built on three pillars. Monetary easing. The Bank of Japan injected massive amounts of money into the economy by buying government bonds to keep interest rates low. Fiscal stimulus. The government increased spending on infrastructure and public works to boost demand. Structural reforms. Policies were introduced to encourage investment, increase productivity, and make the labor market more flexible. While Abenomics initially showed promise by weakening the yen, making exports more competitive, and boosting stock prices, it failed to achieve long-term growth. Inflation remained low, wages stagnated, and structural reforms did not go far enough to address Japan's deep-rooted economic problems. The burden of public debt. Japan has one of the highest levels of public debt in the world, exceeding 260% of GDP. The government has relied heavily on borrowing to fund stimulus measures, social welfare programs, and infrastructure projects. While Japan's debt is mostly domestically held, meaning it's less risky than external debt, it limits the country's ability to respond to future economic crises. Efforts to reduce the debt burden, such as increasing the consumption tax, have backfired by weakening consumer spending. This has made it difficult for Japan to balance economic growth with fiscal responsibility. Globalization and increased competition. Japan was once a dominant force in the global economy, but its influence has diminished due to increased competition from other nations. In the technology sector, South Korea's Samsung and Taiwan's TSMC have outpaced Japanese firms in innovation. China has also emerged as an economic powerhouse, attracting investment and manufacturing jobs that once went to Japan. Furthermore, Japan has been slow to embrace digital transformation and e-commerce, lagging in sectors like artificial intelligence and fintech. While companies like Toyota and Sony remain global leaders, Japan's overall competitiveness has weakened in the face of rapid globalization. The role of cultural and business practices. Japan's rigid corporate culture has also played a role in its economic struggles. Traditional lifetime employment practices, hierarchical decision-making, and resistance to change have made it difficult for companies to adapt to a rapidly evolving global market. While these practices provided stability in the past, they have now become a hindrance to innovation and efficiency. Moreover, Japan's reluctance to embrace foreign workers has exacerbated labor shortages. While other developed nations have relied on immigration to sustain economic growth, Japan has maintained strict immigration policies, limiting its ability to offset its shrinking workforce. The impact of the COVID-19 pandemic. The COVID-19 pandemic further exposed the vulnerabilities of Japan's economy. Supply chain disruptions, declining tourism, and weakened global demand hit Japan hard. The government responded with massive stimulus measures, but the pandemic underscored the country's long-standing structural weaknesses. Additionally, Japan's handling of the pandemic, including delayed vaccination rollouts and sluggish policy responses, further dampened economic recovery. While other major economies rebounded more quickly, Japan's growth remained slow. Is there hope for Japan's economic future? Despite its struggles, Japan remains the world's third-largest economy, with strong technological capabilities, a skilled workforce, and world-class infrastructure. There are several paths Japan could take to revitalize its economy. Encouraging innovation. By investing more in technology, AI, and automation, Japan can regain its competitive edge in high-tech industries. Boosting immigration. Relaxing immigration policies could help alleviate labor shortages and support economic growth. Deregulation and corporate reform. Facilitating businesses' adaptation, innovation, and attraction of foreign investment could stimulate growth. Enhancing global trade. Strengthening economic partnerships and trade agreements could open new markets for Japanese goods and services. Japan's economic struggles are the result of multiple interwoven factors, including the burst of the asset bubble, prolonged deflation, demographic challenges, and rigid corporate structures. While government initiatives like Abenomics attempted to revive growth, they fell short of addressing the core issues. However, Japan is not without hope. With strategic reforms, investment in innovation, and a more flexible approach to globalization, Japan can still reclaim its position as an economic powerhouse. The key lies in adapting to a rapidly changing world while preserving the strengths that once made Japan a global leader. Let me know in the comment section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.